If you're interested about the luxury industry, luxury companies, luxury stocks, goods, whatnot, you might have heard about the potential merger acquisition of Capri and Tapestry. Now, that merger currently is not going to happen because it has been blocked. Surprise, surprise, right? We've seen that before with JetBlue and Spirit. We've seen that with Amazon and iRobot. We've seen that with Adobe and Figma. I'll show you some examples in just a second. But yeah, this is not the first time that this happened, right? But what we have also seen is Microsoft acquiring Activision for multiple billions of dollars, right? That was not an issue. Okay, quite strange to me. But all right, right now, Capri Holdings is actually down close to 50% on Friday, now has a market cap of $2.5 billion. And actually, Tapestry is up, I think, over 10% on this news. Why is that? Well, because the market thinks that they offered way too much for Capri, and Capri is basically now a struggling business despite the brands that it owns. Now, it's not just me saying this. If you look at what the analysts are expecting here for fiscal 2025, sales is expected to decrease 8%, EPS expected to be 33% lower than fiscal 2024. Yes, analysts are expecting those things to accelerate in the next 2 fiscal years, but I mean, yeah, EPS is expected to grow quite quickly, let's say, but sales growth of around 2% or so is not screaming huge success, right? Okay, right now we are at a forward PE of 8.5 times, not the most expensive one out there, but I mean, this is a company that, yeah, you will see in a second that it's not having huge success, especially not coming out of the pandemic. If we currently look at the average analyst price target, and I'm sure we're going to get a lot of new price targets in the coming days, but currently with the recent drop in the average analyst price target, it still sits around $40, representing 88% upside from the price we're at today. Now, if we compare both Capri and Tapestry one to each other, forward PE, price earnings to growth, price to free cash flow, price to sales, and then EV to EBITDA, we can see that, well, one, forward PE, Tapestry, 11.2 times, which is also not the most expensive one out there. When you look at price earnings to growth, here it becomes a little bit more interesting. We see Capri here at 2.85, which is not cheap at all. And then we've got Tapestry at 1.18, which in my opinion is quite cheap. If you look at price to free cash flow, both of them are really not that expensive. Price to sales, same thing here, 1.8 times for Tapestry, 0.5 for Capri. And then we've got EV to EBITDA, 10.7 times for Capri and 9 times for Tapestry. So yeah, from a multiples perspective, you might say, okay, this looks quite cheap, right? Could be. But again, you have that risk of uncertainty. You don't know what's going to happen. From a Tapestry investor perspective, this news, of course, now you're up 10, 12% or so, which is great. But then on the flip side, you still don't know, is the deal really off? Because both of the companies are going to appeal. So you don't know what's going to happen. And then from a Capri's perspective, you're like, okay, we're down 50% now, but there is still a chance that this deal goes through if, well, the appeal is successful. And so, yeah, maybe it's worth keeping the shares, or maybe it's even worth buying more shares right now as a sort of, well, a gamble, let's say. So let's discuss all of that in this video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not. Really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so for those that don't know, this is basically Capri Holdings. They own brands like Versace, Jimmy Choo, and Michael Kors. They say here, Capri Holdings is a global fashion luxury group consisting of iconic founder-led brands Versace, Jimmy Choo, and Michael Kors. Our commitment to glamorous style and craftsmanship is at the heart of each of our luxury brands. We have built a reputation on designing exceptional, innovative products that cover the full spectrum of fashion luxury categories. Our strength lies in the unique DNA and heritage of each of our brands, the diversity and passion of our people, and our dedication to the clients and communities we serve. So, let me now step back a little bit and explain what has happened in the last couple of years. So, these were one of the mergers and acquisitions that were announced. We have August 2022, Amazon to buy iRobot. January 2024, deal is off. By the way, why? Why does it take so long for a deal like this to be off or on? Just doesn't make much sense. Same with Figma and Adobe. That deal just didn't happen, but it should not have taken so long to make a decision. I don't get it. Then, October 2022, JetBlue to buy Spirit Airlines. What happens almost, well, not almost 2 years, but 1.5 years later? January 2024, deal is off. August 2023, Tapestry to buy Capri. October 24, deal is off. So, let's see what has happened. Interesting here. Spirit Airlines is down close to 83% year to date. iRobot down close to 80% year to date. Capri Holdings, as we've seen, down close to 50% the day after the announcement was made. So yeah, here you have Marcelo Lima basically writing it out, what everybody has been thinking. And this was even before the Capri Tapestry thing that happened. So Lina Khan blocked Amazon from buying iRobot. iRobot then had to lay off 31% of their employees and are losing money hand over fist. Then she blocked JetBlue from acquiring Spirit Airlines. Spirit is now contemplating bankruptcy. Great job, Lina. Yeah, I mean, I understand that sometimes you do not want one company to acquire the other for anti-competitive stuff, but more recently, not letting them acquire the other company results in the other company basically putting people out of business and maybe going out of business as a whole. So yeah, I don't know how successful that person is, and maybe in the coming weeks, that person might also be out of a job, which might be very, very good for, well, mergers and acquisitions. So, moving on to the response from both companies. We've got one from Capri here that said that they intend to jointly file with Tapestry a notice of appeal to the US Court of Appeals for the Second Circuit regarding the US District Court for the Southern District of New York's decision to grant the US federal or the US FTC motion for a preliminary injunction to block Tapestry pending acquisition of the company. Then you've got another response from Tapestry. By the way, they own Coach, Kate Spade New York, and Stuart Weitzman. They issued the following statement. Today's decision granting the FTC's request for a preliminary injunction is disappointing and we believe incorrect on the law and the facts. Tapestry and Capri operate in an industry that is intensely competitive and dynamic, constantly expanding, and highly fragmented among both established players and new entrants. We face competitive pressures from both lower and higher priced products and continue to believe this transaction is pro-competitive and pro-consumer. We intend to appeal the decision consistent with our obligations under the merger agreement. Now, this is, I mean, I've seen some of the reasons why they blocked it. One of the reasons, and I'm not kidding here, one of the reasons was, bags are essential stuff for day-to-day lives of women. I'm like, yeah, maybe, but $800 bags? Is that so essential to your day-to-day life? I mean, how does that make any sense? This whole thing does not make sense. Since when are we putting so much time and effort into making sure that, expensive bags, maybe that's going to be, well, very, very anti-competitive if these two companies suddenly merge, because that's going to be the end of it, right? It's going to be the end of LVMH. It's going to be the end of Kering, of Hermes, and of every other player in the bag and the shoe market, right? That's really worth spending time and money on this issue. It's insane. When you think about it, it's actually laughable, to be honest. It's sad, but laughable at the same time. And by the way, I'll show you Capri, their business, right? You can see here. Yes, they've seen a nice recovery from the first pandemic hit, but after that, well, you see revenue declining, right? You see revenue declining, free cash flow positive, okay, so that's fine. And then expected recovery in the coming fiscal years for free cash flow, and for revenue growth, as we've seen, not so much. But you cannot tell me that this is a successful firing on all cylinders type of business, right? No. So let's say the merger does not go through, this company continues to struggle. What happens then? Maybe they'll start selling one of their brands, right, to other companies. And what, are they not going to allow that as well? By the way, LVMH has been buying companies left, right, and center. Why can they do that and these two companies cannot merge together? I mean, yeah, sometimes these things are, big government is just ridiculous. But okay, if we look at Tapestry, this is a company that actually looks better. Yes, you're not getting here huge growth with regards to revenue, but at least it's not declining, and then free cash flow is quite stable as well. So yeah, you could say that Tapestry is in a much better place than Capri. Now, if you look at both companies, again, this shows the bigger picture revenue-wise. Blue is Tapestry, orange is Capri. I mean, yeah, Capri declining revenue, Tapestry basically revenue staying flat for quite a while. Then, if you look at operating margin and gross profit margin, same thing here. The company with better margins is Tapestry, the one with struggling ones and declining ones is Capri. Now, if we do a quick reverse DCF here for both of those companies, right? We've seen the free cash flow trailing 12 months for Capri, that's $170 million. We have the terminal growth rate, 4.24%, discount rate, 8.04%, and then the implied growth rate sits at 0%. And still, the intrinsic value sits 31% higher than the price we're at today. Of course, you can add here execution risk, which will add to the discount rate. So, I mean, even let's put the discount rate quite high at 12%. So now, of course, we have to go a little bit up, right? So now the implied growth rate would be closer to 5.5% in the next 10 years. And as we've seen, yes, free cash flow is expected to grow more. Revenue is expected to grow just to 2.4% or so in the next 2 fiscal years. So yeah, you might say, okay, this is still not worth it. But bear in mind, I just changed the discount rate here to 12%, more risky. But on the flip side, if it gets acquired, I mean, I think the acquisition price was $57 or so, then yeah, you're more than doubling your money. Moving to Tapestry here, and this is quite strange because, I mean, free cash flow was just above $1.1 billion. Same thing here, terminal growth rates, same as before, and the discount rate at 8.2%. It was a mistake before, didn't update the number, but still, implied growth rate 0%. And so you have like an upside of 81% compared to the price we're at today, which is quite strange. But yeah, I mean, those are the numbers I'm getting. So I guess Tapestry is in a much better position and the stock as well. But yeah, maybe here as well you'll have to add some risk. So let's add 12%, and then at 12%, then let's say you'll have to put something like this. Even at 1% implied growth rate, you should see 4.27% upside from the price we're at today with this terminal growth rate and this discount rate. Yes, maybe the terminal growth rate is too high, but I'm not deciding these numbers. And so right now, looking at Capri, of course, a huge red candle here on the weekly. We're now also oversold, and we're back to levels not seen since October of 2020. So yeah, that's Capri. As for Tapestry, we can see that we are just above the resistance point, which was previously here in April 2021, $50. We have now that huge green candle thanks to the, blocked merger right now. But like I said at the start of this video, in the middle of the video, I think right now investors are having to choose between, am I taking this opportunity to get out of Tapestry, or am I taking this opportunity to maybe gamble on the fact that this merger might go through and then Tapestry stock will probably go down and Capri stock will definitely soar? So yeah, there is still risk here. One business is doing much better than the other. I would not buy Capri because, it's down 50%. I like the business and so I'm buying it right now. Even though it is, let's say, undervalued, it still is a struggling business currently. Now, last point I want to make is for future M&As, as long as the current FTC remains unchanged, I think it's always going to be a sell the news type of thing. So if company A is going to acquire company B, news comes out, company B stock is going up, I'm not waiting around, right? I'm selling, I'm taking my gains. Thank you very much. I don't trust the FTC as long as the current one still exists. Maybe if there's going to be a change in the next coming weeks or months, then fine, then the things will change. But as of now, first of all, this story is completely ludicrous. We're really talking here about luxury goods, luxury handbags. We're not really talking about essential day-to-day stuff, and how these companies are now going to monopolize this market that is so crucial to our day-to-day lives. So yeah, that's all I've got for you right now in this video. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye bye.